Good morning. I'm Andy Myers at Weiss Research.
I'm Jen Amos, and this is your morning market update for Wednesday, November 9th. We're seeing heavy losses on Wall Street and across the European markets. Stocks are giving up all of yesterday's gains and then some, amid renewed fears about Italy's debt situation. The sell-off began after clearing firm LCH ClearNet raised its margin requirement for Italian government debt. That caused investors to dump the bonds and sent the yield on the country's benchmark 10-year note to a new Euro-era high of 7.4%. The yield has since come back down below 7%, but it's still at a level that many strategists consider unsustainable. When bond yields hit similar levels in Greece and Portugal, those countries were shut out of the credit markets and forced to seek bailouts from the European Union and the International Monetary Fund. But Italy is considered too big to bail out, especially given the doubts about the size and flexibility of the Eurozone Rescue Fund.
The situation in Italy did seem like it was looking up for a little while there. Late yesterday, investors cheered Prime Minister Silvio Berlusconi's announcement that he will step down once Parliament passes new legislation on austerity and economic reforms. Berlusconi relented after he failed to win an absolute majority in what would normally be a routine budget vote, indicating that he would probably be subjected to a vote of no confidence. Many experts had seen Berlusconi as an impediment to progress on solving Italy's debt problems, so the announcement of his resignation was seen as a positive. But that optimism has now faded, and renewed concerns are dragging down the region's shared currency. The euro is slumping all the way to 136 against the dollar, and the dollar's relative strength is acting as a drag on most commodities. Crude oil is falling more than $1 and is now well below $96 a barrel. Meanwhile, investors are rushing into U.S. Treasuries, sending the yield on the 10-year note back below 2%.
Taking a closer look inside the sell-off in U.S. equities, we see that financial stocks are taking a beating. While the biggest U.S. banks may not be linked directly to Italian debt, they do business around the globe with other firms that may have exposure. The selling pressure seems to be focusing most heavily around Morgan Stanley, which is tumbling nearly 6%. Citigroup is falling nearly 5%, while Bank of America, JP Morgan Chase, and Goldman Sachs are all down more than 3%. Another big stock decliner this morning is General Motors. It's falling 7% after reporting a 15% decline in third quarter net income. GM's top and bottom line numbers were actually a bit better than analysts expected, but the company affirmed its earnings outlook for the full year. GM said it no longer expects to break even in Europe due to the region's deteriorating economic conditions.
We're also getting quarterly results from a couple big names in the retail industry. Macy's said profit in the latest quarter surged on strong demand from online shoppers and improved same-store sales. The department store chain also boosted its earnings outlook for the full year, but said its bottom line for the current quarter will come in shy of Wall Street forecasts. Shares of Macy's are dropping nearly 3% on the news. Ralph Lauren is also sharply lower despite a largely positive report. The company topped estimates with a 14% increase in profit and lifted its revenue outlook for the full year, but its shares are falling about 5% in early trading. And finally, keep an eye on Cisco Systems today. The networking equipment maker is falling along with the broader technology sector. Cisco's quarterly results are due out after the closing bell. That's the latest from Weiss Research. Have a great trading day.